What are the different types of capital?
Authorized share capital and issued share capital.
What is
Um,
authorized share capital?
Authorized is the maximum amount of capital that business can sell to its shareholders, and issued share capital is the amount that it actually has sold to the shareholders.
Can you give me an example of this?
The authorized share capital can be $100,000, but the issued share capital was actually $70,000.
Okay, it could be $100,000, but you can issue less amount. Okay, what is called up capital?
Called up capital is the total amount of capital that the business asks for, and paid up is how much the shareholders
So, like if
actually
my
pay.
issued share capital is $70,000
Hmm.
and the share is of $1 each.
Hmm.
So, what is the called up capital? Can you give me?
70,000.
70,000 is the number of shares, right?
Yeah. Oh, the called up is wait.
You have issued 70,000 shares.
Acha,
Hmm.
called up will be like 50,000 or something, 40,000.
No, whatever you issue is issued. The number of shares that you issued is final.
Hmm.
Now you have to call up from this $1. You will not call $1 altogether.
Yeah.
Okay, you will do a breakup. Maybe you will call only for $0.50
Hmm.
per share. So when I'm
Yeah.
saying called up capital is that amount that I'm asking my shareholders to pay me.
Yeah.
So maybe I'm asking my 70,000 shareholders 70,000 shares of $1 each. And I'm asking them to pay only $0.50.
Yeah.
Called up. Called
Hmm.
up means I'm only asking them to pay me 0.50.
150.
Okay. Called up is the amount that I'm asking them to pay, and whenever I call up the money, I will create the capital. I am repeating the statement. Whenever
Hmm.
I call up the money, I will create capital. So I
Yeah.
have called up for how much? Per share.
0.50.
So I will create capital for how much? I have 70,000 shares
5,000.
and I have called up for 0.50 per share. So I will create a capital of 35,000.
Yeah.
Are you with me?
Yeah, miss.
So whatever I call up is my capital. Whatever I call up is my capital. Whatever I issue is a separate thing, but I should ask my shareholders to pay me. When I
Hmm.
ask them to pay me, that means I'm calling for the capital.
Hmm.
Now, what is paid up capital?
The amount the shareholders have actually paid.
Suppose your shareholders have paid 50,000 shareholders have paid you full money
Yeah.
and 20,000 shareholders did not pay.
So paid
So,
up
what will
is
be your paid up capital
50,000
into
into 0.50.
0.5? So, your paid up capital will be
25,000.
25,000. So, your paid up capital is 25,000. And what is the amount that your shareholders have not paid you?
20,000 into 0.50, so 10,000.
10,000 they did not pay you. So the money that your shareholders do not pay you, it is called the calls in
All
arrears.
in arrears.
What is it called? Calls
Calls
in
in arrears.
arrears. So from your share capital, you will deduct your calls in arrears. What is your calls in arrears? 20,000 shares into 0.50. So 10,000.
10,000.
What you
So
will get
25,000.
outside is called your paid up capital.
Yeah.
Okay, so this is which capital? This is the
This
called up
is
capital.
yeah,
This is which capital?
called up capital.
This is what?
Calls in arrears.
This is calls in arrears. What is paid up
Yeah.
capital?
Paid up capital is 25,000.
Yes. So called up capital minus your calls in arrears will give you your paid up capital.
Okay.
Okay. Now can you tell me what are the two types of shares that we normally have?
Preference share and ordinary share.
What is the difference between a preference share and ordinary share?
So preference shares is the like owners take the preference amount of the shares. So they receive a fixed rate of dividend. They do not have voting rights, and they receive their dividends before the ordinary share capital.
Even if
Then
there is no profit, they will get dividends.
they will get dividend. Then they receive before the ordinary share
They
capital.
receive capital before the ordinary shareholders in
Yeah,
the event the company is closing down. So if
yeah,
the company is closing down, you will have to return the capital. So first you
yes.
will return it to the preference
Before
shareholders and then you will return the capital to the ordinary shareholders.
ordinary shareholders.
The
Yeah, so
dividend that you give to the preference shareholders will appear in which statement? Income statement or statement of changes in equity?
the wait, Miss, what was the question?
The dividend that you give to your preference shareholders, it will appear in which statement? Income
SOC,
statement or SOC?
SOCE.
No.
Okay, then income statement.
The dividend that you give to your preference shareholders will come in the income statement under which cost?
Financial cost.
Finance cost. The dividend that you give to your ordinary shareholders will come where?
In the SOCE.
In the
S,
SOC. What is the features of ordinary share capital?
uh, they receive variable dividends every year. They are they have voting rights, and they receive their shares
They
after the
receive
preference
their
share
dividend after
dividend.
preference shareholders. They receive their capital after preference
After the
shareholders.
capital
So
dividend they receive after preference shareholders.
preference shareholders receive fixed rate of dividend. Ordinary
They get
shareholders they
variable.
receive variable dividend.
Hmm.
These people are not entitled to vote, but ordinary shareholders they are entitled to vote. They receive dividend before ordinary shareholders, even if there is no profit. And they
Okay.
receive dividend after the preference shareholders.
Hmm.
When the company is winding up, you will first pay. If the company is winding up, you will first pay preference shareholders and second you will pay ordinary shareholders.
Shareholders.
Can you give me the advantages and disadvantages of operating as a limited company?
They can get more capital as there are more shareholders than sole traders. Then they can get loans easily. Then there is limited liability, so the personal assets aren't at risk. There's a separate legal identity, and there is a continuity of it can like of its yeah, wait, sorry. There is continuity of its existence because there are many shareholders. Then in disadvantages, there are many legal requirements and forms to be done. Then it is a complicated setup process. Then what else is there?
Yeah, that's it. Why do
Yeah,
you transfer money? From where to where do you transfer money in your statement of changes in equity?
the retained earnings to general reserves.
You transfer money from the retained earnings and you
Okay.
transfer it to the general reserves.
Yeah.
Why do you transfer it?
Um, is to keep it in the business.
Even at both the places, it is going to remain in the business. But why do you transfer it to general reserves?
Um,
So basically, retained earnings lie of free reserves. You can use it for any purpose. Okay,
okay.
you can use the money that is there in the retained earnings for any purpose that you want. When you
Hmm.
transfer money from retained earnings to general reserves, so that you can retain the funds in the business for emergencies and contingencies
In the general reserves.
in the general reserve, and you strengthen the position of your company. because you can't use money from general reserves for anything that you
Yeah.
want. Okay. Can you give me two places where proposed dividend would appear?
Proposed dividend would in the wait, means it comes in the appropriation account?
In the your proposed dividend of the current year would come in the current liability. Okay. And
Yeah.
in for years in limited companies, you do not make SOCE. You do not make appropriation account. You make SOCE. But in your SOCE, you're going to write proposed dividend of which year?
Of
You will write
the
proposed dividend of the last year.
yeah.
Yeah. So of the current year, you will write it in the income statement. Okay. Okay.
Yeah, Miss got it.
Okay. Where will debenture interest come? Two places where debenture interest will come.
The income statement in the financial cost.
As debenture interest,
Yeah. It comes in current liability.
and it comes in current liabilities.
Yep.
Perfect. Okay. When do you say you're issuing shares at a premium?
What did you ask, Miss?
When do you say that you are issuing shares at a premium?
Um,
Suppose you have shares. You have shares whose face value is 10. Okay. And you issue it at 12. So the shares whose face value is 10, you issue it at 12. That means you are issuing the shares at an extra price.
yeah.
Okay. So the extra amount that you're going to receive on the issue of shares is called the premium. What is it called? What is it called?
Premium.
Premium. So this extra amount will go to a separate account which is called the share premium.
Yeah.
Okay. So if you are issuing shares of 10 at 12, can you tell me the amount that will go to the capital?
2.
Capital. What is the face value of your shares?
10.
So the amount that will go to the capital is how much?
10.
10. How much will go to the share premium?
12.
What is the extra amount?
No, 2 will go in the share premium.
Okay. So when you issue shares of 10 at 12, okay, you're making a profit on the issue of shares. The profit on the issue of shares is going to another account which is called the share premium account
Yeah.
or securities premium account, and the 10 will go to the capital. Are you with me? Okay, fine. Now let's do this sum which is only based on statement of changes in equity. Let's do this sum. Read the question.
Yeah, Miss Machal.
Read the question.
The financial year of Peter Limited ends on 31st March. The income statement for the year ended 31st March 2020 showed a profit for the year of $40,000. Complete the following statement of changes in equity for the year ended 31st March 2020, which has been partially prepared by the accountant. Okay.
So now your financial year
This is a
of
total.
Peter Limited it is ending on 31st March. Okay. Your income statement shows a profit of 40,000. Can you tell me where will this 40,000 go? Can you tell me where will this 40,000 go?
Wait, which that one? Profit for the year, metal.
Yes.
Yeah. It will be in the retained earnings.
It will be in the retained earnings and it will be in the total.
Yeah.
Okay. Now you have to complete this box. On the first date, you have the opening balances. So where will you put it? 210,000 plus 8,000 plus 4,000. Your total is how much? Are you getting the same thing?
1 sec, plus 4,000. Yeah, same thing.
Okay. Profit for the year comes at two places. It will come in retained earnings and it will come in the total.
Yeah.
Final dividend you will pay from where?
Fine, from the retained earnings.
So you will pay the final dividend from the retained earnings. It will
Minus
be a
5,000.
negative. Interim dividend you will pay from where?
Interim you will pay from retained earnings. No, ordinary share capital.
You will pay from the retained earnings.
Okay.
Okay. If you're
Yeah.
transferring money to the general reserves, it will go out from where and it will come where?
Into the general reserve. It will go out from retained earnings and go into the general reserve.
It will go out from the retained earnings and it will come to the general reserves.
Yeah.
So I will do the total of all this and I will get my statement of changes in equity. So this is 11,000. Can you give me the total of the retained earnings?
Yeah.
It is 44,000 minus 5,000 minus 1,000 minus 3,000. It is 35,000.
Yeah.
Can you give me the total of the total column? 222,000.
256,000.
40,000 minus 6,000. 256,000. Can you give me the shareholders funds?
Shareholders funds.
Shareholders funds that will come in the statement of financial position.
All the total values over here.
This.
Yeah, the balances.
Okay. So this will be the shareholders funds that will come in the statement of financial position under the heading of capital and reserves. It will come under the heading of capital and reserves. You have another sum over here. Okay. Tell me, ABC Limited has a share capital which is consisting of ordinary shares. It shows a profit of 21,000. Can you tell me where will the profit come?
In the retained earnings.
And?
The total column.
And the total column. Okay. Now you have to complete this table. The share issue, it is there in the ordinary capital. Where will it come now?
The share issue is there in the...
It is here.
Oh, that 20,000 will in the total column.
Okay. Final dividend?
Final dividend will be minus from the retained earnings.
Interim dividend?
Minus from the retained earnings.
And transfer to general reserves?
Minus from the retained earnings and added to the general reserves.
So nothing will come here. The total is here 200,000. It's 27,000. Retained earnings total is 15,300 and your main total is 242,300. This will come in your shareholders funds, capital and reserves, statement of financial position. Please go through it.
Yeah.
Okay. So we are done with the statement of